So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling, 28th of August, 2019. No trade calls, no recommendations, or response for their own stuff. We're here for educational purpose only. So, just a little bit of an update, been trying to do these more early morning updates. And, basically what we said was that the ES was stuck, and we said that essentially don't read too much into the shenanigans that are going on, right? And that in the same way we sold off hard on Friday, we would expect any kind of a gap down open on Monday to be a buying opportunity, not a selling opportunity. At least that's the way it worked 80% of the time. And again, a couple of tweets and it was completely undone. We said you have to keep in mind that you've got the G7 going on all on Monday. What are the chances that they're all going to come out one after the other and with negative kind of headlines, right? So the day is saved for now, and now we're still stuck. The problem is we're just one headline away from this being up or down 3%. Even though the market does look a little bit tired. I mean, at the base case assumption should be that Trump does not want a recession. Trump needs to be reelected and he will do whatever it takes to do so. But I think the markets are getting a little bit tired, and you see that they're not rallying as much on the pumps, right? I mean, one thing to keep in mind is that we are still in this weaker seasonal period for the ES, for stocks. And what's going to be interesting is to see what happens here, and if indeed, after we had a nice little chance to play the downside in August, if we get another chance to get, 5-10% correction into September, for then, classically seeing us get a little bit of strength all the way into the back end of the year. Maybe there's a bigger sell in 2020. Now, the big thing to keep in mind here is that we've got over the weekend, this is a long weekend coming up, right? Labor Day on Monday, so markets are going to be closed. And I also tweeted that article, about the tariffs going into play September 1st. And we'll have to keep in mind that there's an awful lot of event risk, both in terms, what's going to happen over the weekend, who's going to tweet what, who's going to retaliate to what, because the markets are closed for 3 days. So here, the base case assumption is still that they are going to try and pump it up, right? As we said, we would have been buyers on the gap down, and here we would not be surprised if this is a low and that we try to rally them up all the way, as we discussed on Twitter, to get close the month unchanged or close the month positive, right? You have to keep that in mind. But in terms of bigger picture, nothing really has changed. But keep in mind that this rally, if we do get it, the rally into the end of the month, and if we get the next couple of days, this really pumping back, it might be interesting to hold some kind of short exposure, at least short term over the weekend, just some kind of risk off exposure over the 3-day weekend. We'll have to see, but in any case, I'd be very, very cautious with having big positions over this 3-day weekend, because there's a lot of risk. But again, the focus should still be that the market is very, very choppy. Anything can happen, and sadly but surely, I think we haven't seen the ugliest of it yet. Okay, so that's and the big question is, again, going into this month end, is the panic Sunday low going to hold on equities? And that means, is that going to translate into ZN's holding the panic high, right? That's going to translate into gold holding that panic high, even though we've seen silver's just gone cocaine angel these past 2 days, and essentially DXY holding that little low. So in this base case assumption, we'd also see DXY rally again. Again, we'd still be sellers longer term for this to break down. But again, it's a tricky one. Markets are dead. You can see the overnight range so far on the ES or on the Nasdaq, and in general on indices, has been anemic. Just nothing's really going on. We're getting a lot of chop on the currency side. The only things that are really moving are something where you get some kind of a headline. So you have to be patient and keep the bigger picture in mind. And as we've been saying, there are a lot of key zones held on that Sunday open. And again, the base case is what happens. To make it very, very simple in terms of the ES, again, 2880 to the downside. 2800 to the downside, 2880 is the pivotal level, and you've got this 50-day moving average capping to the upside, right? So as we said, as long as we're stuck here, this is a lot of chop. Day weekly closes below 2800, then it gets potentially very, very ugly to the downside, especially with a liquidity event. And if we close above the 50 DMA here, then we could really see a big squeeze all the way back into all-time highs. But as long as we're trading inside here, we think the priority is to try and be tactical, trade inside the range. If you're trying to be active, scalp inside the range, and then people will be positioning. But I think shorts, if anybody who really wants to be short structurally is already short or has already started to build that short, and anybody who wanted to get long structurally is already holding that. So in here, we could just see a lot of air pockets, okay? That's pretty much where we are. Let's see what we get. Wishing everybody an awesome day. All the best. Take care. Bye-bye.